You might be surprised at just how many Americans are already investing in the stock market. And if you're one of them, congratulations. You're doing what most people wish they had started years ago. You're setting yourself up for long-term success. The truth is, most adults either wait too long to begin or they jump in without a plan. But starting early, even with small amounts, puts you in rare territory. It gives you a head start that can compound into real financial freedom later. The numbers. Here's the big picture. It's about 62% of US adults have money invested in the stock market. That could be individual stocks, mutual funds, 401ks, or IRAs. At first glance, that sounds impressive. More than half of adults participating. But here's the catch. That percentage has barely moved in decades. And when you dig deeper, you realize something important. Just owning stock doesn't automatically mean you're building wealth. Most people aren't investing enough, they aren't consistent, and they aren't thinking long-term. Younger generations. Now let's zoom in on younger adults, because this is where things get interesting. Around 44% of Americans between 18 and 29 own stocks. That's nearly half of young adults. A decade ago, the number was much lower. It's historic. And it signals something big. Younger generations are catching on faster than ever. Some even call Gen Z the most financially savvy generation yet. They're not waiting until their 40s or 50s to figure it out. They're starting now. But here's the flip side. More than half of young people still aren't in the market. And honestly, that makes sense. Most don't have piles of extra cash to lock away for decades. Still, the ones who make it work, starting with just $50, $100, maybe $200 a month, are setting themselves up for serious rewards later. Why it matters. And here's why this matters. Everything is more expensive today. Homes, cars, raising a family, it all costs more than ever. Young people are looking at that reality and deciding they can't afford to wait. They understand that time is their biggest advantage. A single dollar invested in your 20s has decades to grow. At an average 8% return, $1 today could grow into more than $20 by retirement. That means a simple $100 investment now could quietly turn into $2,000 without you lifting a finger. And that's the magic of compounding. Mindset shift. When you realize this, every purchase looks different. That $5 coffee isn't just $5. It's like giving up $100 your future self could have had. Dropping a $1,000 a month on a car payment? That's like saying goodbye to $20,000 down the road. Smart investors start asking different questions. How many hours of my life am I trading for this purchase? At $25 an hour, $1,000 equals 40 hours of work, an entire week before taxes. Thinking this way changes everything about spending and saving. Traits of early investors. And this is what sets early investors apart. Discipline, setting money aside consistently. Patience, it's letting investments ride through ups and downs. Vision, thinking 10, 20, 30 years ahead, not just next weekend. Delayed gratification, like making small sacrifices today for much bigger rewards tomorrow. These traits are rare, but they're the foundation of real wealth. Reality check. Here's the reality. Most young investors aren't pouring thousands in every month. They're starting small. $50 here, $100 there. The amount isn't what matters, it's the mindset and consistency. Compared to peers who don't invest, that mindset alone puts them miles ahead. But let's not sugarcoat it. The median net worth for Americans under 35 is just $39,000. That's household net worth, not even individual. If you're consistently investing, even small amounts, you're already putting yourself on track to beat that. And here's what most people forget. Wealth doesn't grow in a straight line. It snowballs. At first, your contributions are everything. But eventually, your money starts earning more than you add yourself. That's when the magic happens. Example. Let me give you a clear example. Investor A starts at age 25, invests $200 per month until 65, earning 8%. Investor B waits until 35 and invests the same amount until 65. By retirement, Investor A has about $698,000. Investor B, only $298,000. Both invested the same, but a 10-year head start meant over $400,000 more. That's the power of time. The regret factor. And that's why one of the biggest financial regrets people have later in life isn't that they invested too little. It's that they didn't start sooner. They think back on cars that lost value, gadgets that broke, furniture collecting dust, and they realize that money could have been working for them instead of disappearing. Because here's the truth, the one thing you can't buy back is time. The shift. But something is shifting. Younger investors aren't waiting until 45 to get serious. They're saying, I'll start today. And that simple decision, shifting from someday to today, is what changes entire financial futures. Even if you're starting small, you're building the right habits. And as your income grows, your contributions can grow too. That's how wealth is built, step by step. The takeaway. So yes, 62% of adults own stocks. A huge chunk still doesn't invest at all. Many who do invest make costly mistakes. Panic selling, cashing out early, chasing hype. If you're staying consistent, if you're avoiding emotional decisions, you're already ahead. And your advantage isn't just measured in dollars, it's in freedom, flexibility, and peace of mind. Because investing isn't just about retiring at 65, it's about options now. It's about walking away from a job you hate. It's about starting a business without risking your whole household. It's about reducing stress and giving yourself choices that most people never have. Here's the bottom line. Investing early doesn't just build wealth, it builds freedom. It builds security. And most importantly, it builds time. If you're in your 20s or 30s and you're already investing, even small amounts, you're doing something most people wish they had done. You're setting up your future self to live with options, not limits. And that's the smartest move you'll ever make.